talk about Bitcoin is just talking about the legacy problems and kind of what the average person does, and both from those that are successful and those also that are not successful. And so let's start with some statistics around just the United States, right? 45% of Americans hold no investable assets.
That's so crazy.
So right out
what
of the
is
gate,
an investable asset for people that don't know what that means?
a stock, a bond, cryptocurrency, real estate, right? All the things that are basically are not cash that you're buying because you think that they're going to appreciate in the future. And so really that 45% of folks are living paycheck to paycheck. They keep all of their wealth stored in dollars in a bank account. They tend to be, obviously not very well financially off, but also on top of that, they tend to actually not be nearly as educated about how the system works. So there's a wealth inequality gap, but there's also a very large education gap. And so
do you think they're one and the same?
I think that the education gap actually drives most of the wealth inequality. And really it's because of the debasement of the currency.
That's interesting. So we'll get to debasement of currency in a second. I've made a statement that I expected to be more controversial than maybe it's become, which is, so I worked in the inner cities a lot. Yep. So I have seen firsthand up close intelligence be evenly distributed. So they can process raw data very quickly. Like You're hanging out with them. You're like, okay, you're poor. You come from a long line of poverty. And yet you're incredibly bright. Like, I am confused now as to why you haven't, been able to achieve escape velocity and get out of here. And then you realize that their frame of reference, the way that they think about things, is so detrimental because your behaviors ultimately are all that matter, right? You can think that Bitcoin is the greatest thing since sliced bread, but if you don't actually buy any Bitcoin, then you can't take advantage of the growth. And so I began to realize that, or hypothesize, I should say, that generational poverty is a frame of reference problem far more than it's a money problem. And that if you took that same person, so they're born on day one, they were born to parents that have, lived in the inner cities forever, they've struggled for generation after generation, and you bring them into a household where they're going to be educated around investing and, what the game is that you're talking about, that it's a system, it works in some kind of way. The way is predictable and it will reward some behaviors and it will punish other behaviors, and nothing else matters. And if you do that, they will come out just fine. And so I was like, wow, this really is a knowledge gap problem.
Yeah. I mean, think about if I told you to go play a game and I said, but I'm not going to tell you the rules, right? It'd be pretty hard to play the game at first, at least. Maybe you figure it out, maybe you don't, but you're obviously going to be much better equipped to play the game if I explain to you how the game works and what the rules are. And so if you think of money or finances as a game, there's really one key rule that everyone has to understand, which is the dollars will be worth less in purchasing power terms over a long period of time. That's not a negative towards the dollar. That's not a positive towards the dollar. It's just that is a fact.
And we call it inflation.
Yeah, and the system is built that way. And the economic argument for why it is built that way is because if I know that my dollars are going to lose purchasing power, meaning that today it costs me $2 to buy a loaf of bread, in 5 years it'll cost me $4 to buy a loaf of bread, I'm financially incentivized to either invest the money or to spend the money, but holding it is a losing proposition. Now, that economic theory is predicated on the fact that everyone knows the dollars are going to lose value, because what ends up happening is those 45% of Americans end up not investing the money or really spending the money. They're trying to save the money, but it is losing value. And I always go back, and I think this generational idea is really can be extrapolated even further. It's not just folks on the inner city. If you think back, I'm 33, you're in your 40s. If we go to our parents or our grandparents, for the most part, their financial advice was save, right? Spend less than you make. If you save, then you can make your way to financial security. That was actually true, specifically around our grandparents' generation, a little bit for our parents, and then for us, not so much. And so the advice that was passed down was actually predicated on a situation that no longer exists, because before 1971, there was nowhere near the debasement of the currency that there is today.
Because it was tied to gold?
That's a huge piece of it for sure, right? Which is basically the fact that when we handed over the power to print currencies, right? This is a 50-year experiment that we're in. And, again, there are some very positive impacts of being able to print currency, right? You essentially are able to devalue the currency. You can pay off future debt with kind of less valuable dollars. And there's all this economic theory that...
Really fast, I want to ground this in something I've heard you say before, which I think it was so simple. I was like, whoa. You said, if I have $100 in my bank account and I need 150. I can't go in and edit the database and now I suddenly have $150, but the government can.
Yes.
And I was like, whoa, like when you say it like that and it's like literally just somebody going into a spreadsheet, I was like, oh my God. But like if anybody puts any amount of credibility into whether they think I'm intelligent or not, to think that a guy that could build $1 billion company as of 8 months ago was imagining somebody from the government walking around with like a bag full of cash. Like that's how ignorant I was to the system. And that's exactly how people end up getting held back.
I think that what's fascinating about this is not an uncommon story, right? There are plenty of people on Wall Street, et cetera, who don't understand economics, macro or micro, and also just simple personal finance things, right? This stuff is hard. And it goes back to there's nobody teaching it in school. And so you basically have two ways to learn. You can learn by doing kind of trial by fire, and some people figure it out, some people don't. Or you're lucky enough to have a parent, a friend, a mentor, somebody else who sits you down and explains it to you. And I think that's why you're seeing such an explosion of interest. Yeah, sure, the meme stocks, cryptocurrencies, it's easy to mock and make fun of these young people, but these young people are interested in understanding how does the market work? How does finances work? How does investing work? And so, if you go back to that data, right, we talked about 45% of people have no investable assets. The two stats that just blew me away when I started to look at this was 80% of millionaires in the United States inherited $0. So the narrative is
interesting.
Everyone inherits wealth and it's just passed down. Well, 80% of Americans inherited nothing. 20% inherited something, 80% nothing. The second one is that 33% of millionaires in America never made more than $100,000 in a single year. So you start to ask yourself, well, how does it that somebody that doesn't make six figures a year become a millionaire? Well, they have to be disciplined and understand personal finance. And so it is possible to do it. It's not everyone. It's hard, right? It's not the easiest thing to do, but it can be done. And so as you start to understand, like, okay, the education is a huge piece of this. You actually see that the people who are wealthy, some of them could explain to you why they're doing things. They have a kind of a deep level and detailed knowledge of the actions they're taking and the reason for it. There's a whole other group of people who are wealthy who couldn't explain any of it to you, and they just know that their parents told them, hey, buy real estate. Real estate always goes up. But they don't understand printing of money. They don't understand quantitative easing, interest rate. None of that stuff matters. They just did the action. And so there's a lot of paths to get to kind of the desired area, if you will. But I do think that Bitcoin specifically, what it's done for me and for other people is I have an economics degree, which is crazy because I didn't learn anything. I think Bitcoin is the only one that has an opportunity to actually kind of ascend to global reserve status and end up being the superior monetary form. But when it looks at the technology, I think that there's going to be massive competition on that. So if you look at the technology side of it, where you're not talking about monetary asset, you're actually talking about a technology asset, it would be like saying you're an iOS maximalist or you're a, Python maximalist, right? Depending on the language or the platform or whatever. So I think that you've got to be able to separate out and say, Bitcoin is competing with fiat currencies for store value, medium of exchange, et cetera.
And really fast, fiat just means it's government backed.
Just government backed and basically they control it. So the key definitions here are a fiat currency versus, let's call it, sound money. All sound money is basically something outside of the system and something that people can't create more of. And so if we look over the last 12 years or so, Bitcoin's purchasing power, and all purchasing power means is how much does it cost to buy, a good, the purchasing power has appreciated, it's increased. So all of the expenses around you, all the physical items that you buy have gotten cheaper and cheaper. So it used to cost me 1 Bitcoin to buy a loaf of bread. Now it might cost me 0.0001 Bitcoin to buy a bread. Okay, that's pretty interesting. The dollar's the opposite, right? It costs me more dollars to buy the bread. So everything's getting more expensive around me. And so ultimately...
Dude, hold on. Like that's so basic and so game-changing to understand. So you've done a mental switch where you now denominate emotionally in Bitcoin, aka Satoshis. And I haven't yet. Do you mind saying again the cost of loaf of bread compared to dollar versus Bitcoin?
So if I denominate my life in dollars, and let's say I buy a loaf of bread today and it's $2, 5 or 10 years from now, that loaf of bread may cost me $3, $4, $5, depending on the rate of inflation. If I denominate my life in Bitcoin, and today, let's say that it cost me 1 Bitcoin for a loaf of bread, In the future, it will cost me less than 1 Bitcoin. So it'll actually become cheaper for me to buy, because every asset, when you think of price, it's denominated in a currency. So a stock, right? When I ask you what is Amazon's stock price, you're telling me one Amazon share over how many US dollars. And that's how we get to the actual value. And so when you start to think about that, look at the stock market. The stock market from 1971 to today is up and to the right. So perfect 45-degree angle.
Oh God, I know what you're about to say.
When you denominate it in gold, it's down.
That's
since
nuts.
1971. If you denominate it in Bitcoin since 2009, 2010, it has crashed aggressively. Bitcoin has been the best performing asset, but that's because it's denominated in dollars. And so ultimately what we're watching an entire generation of people wake up to this fiat currency kind of fiasco. And there's a famous, I think it's Henry Ford quote where he said, if people understood how money worked, there would be riots in the street before morning. And it's simply, again, it goes back to that education gap. And so the 55% of people who hold investable assets, whether they understand why or not, they're actually benefiting from this. And so it's important to remember that I don't think there are nefarious or malicious intentions or, let's screw people at the bottom of the totem pole. In fact, sometimes it's actually the exact opposite. But the system is working as designed. It's a feature, not a bug. And the reason why that's important to understand is because the system is not going to change, right? You and I are not going to be able to convince anybody to do anything different. They're going to do what they're going to do because that's the way the system is built. But what you can do is you can change the way that you're positioned. So you have a choice. I can either suffer at the hands of this system, or I can flip around to the other side of the table and I can benefit from the system.